What if you could collect big cash payments every single month without trading options, reading charts, or tracking dozens of stocks? Meet QYLD, the ETF promising double-digit monthly dividends. It's popular, it's controversial, and today we're pulling back the curtain. Is QYLD passive income's holy grail, or a slow leak for your portfolio? And how does it stack up against KNG, the aristocrats ETF trusted by cautious income investors? Welcome to Dividend Surge. I'm Max, and if you're chasing freedom with passive income and American dividends, hit subscribe, smash the like, and let's dive in. By the end, you'll know how these two ETFs really work, what strategies make sense for beginners, and which may deserve a spot in your portfolio. What is QYLD? Money every month. But what's the catch? QYLD stands for Global X Nasdaq 100 Covered Call ETF. Established in 2013, it's built to pay shareholders high monthly income by selling covered call options on the Nasdaq 100 index. Think of it as a machine that trades future gains for cash right now. No day trading, no technical analysis, just set, collect, repeat. How does QYLD work? Here's the secret sauce. Owns a portfolio that tracks the Nasdaq 100 tech giants, Apple, Microsoft, Nvidia. Every month, sells covered call options against its portfolio, generating premium income. Passes most of this income straight to shareholders as dividends, often over 10% annually. Meet the challenger. What is KNG? KNG, CBOE S&P 500 Dividend Aristocrats Target Income ETF. Invests in dividend aristocrats, those rare companies boosting dividends for 25 plus years. Sells covered calls on only 20% of its holdings. So, KNG sacrifices less potential upside for income. Result: lower yield than QYLD, but more potential for price appreciation over time. Okay, let's a quick look table. In summary, QYLD is a big yield now. KNG is steady compounder. Total returns, 2015 to 2025. You'll see, QYLD's line is flatter, sometimes dipping, while KNG steadily rises. Why so many investors love QYLD? Monthly income, like getting a bonus paycheck, perfect for retirees, side hustlers, and passive income fans. No options knowledge required. All the complex trading happens inside the ETF. Yield looks unbeatable on paper. What KNG offers and why it's hot? Stable businesses. All holdings are fortress-like dividend aristocrats. Resilient in recessions. Defensive with less drastic drops in bear markets. Balanced yield and growth. Enough income for comfort, with your principal growing over time. Real strategy example. QYLD in action. 2020. Invest $10,000 in QYLD at $22.60. You get 442 shares. From 2020 to 2024, you collect about $4,597 in dividends. Price in 2025, $17.50 per share. Your shares now worth $7,735. Total value is $12,332, about 5% annualized return. Strategy example 2, KNG for the long term. $10,000 invested in KNG in early 2020, $48 per share, gets you 208 shares. Dividends collected, $1,498. Share value by mid-2025, $11,922. Total, $13,420, better than QYLD and principal grew. Surge Spark analogy. QYLD is like a park bench. It gives you a comfy seat right now, but might rot over time. KNG is the growing tree. May start slow, but plant it, and someday you're relaxing in the shade and watching your investment grow. 2025 market snapshot. Yields, risks, and fees. QYLD. Yield 11%. Expense ratio 0.6%. High. Weakness. In bull markets, you give away most of the upside. KNG. Yield 5.5%. Expense ratio 0.75% for active selection. Strength. Less volatile, principal usually grows. Risks and red flags. QYLD. Large monthly payments come from limiting upside. Principal erosion. If you started with $10,000 in 2016, your shares now are likely worth less, even after those juicy dividends. KNG. Lower yield, but safer for long-term growth and recession defense. No free lunch. Always know the trade-off. Who should invest? Buyer profiles. QYLD is for people who want income, now retirees, bridge to fire, paycheck investors. KNG is for those who want steady income and long-term growth, accumulators, reinvestors, wealth builders. Hybrid strategy and community question. Some smart investors use both. 70% in KNG for growth, 30% in QYLD to boost short-term cash flow. What's your style? Do you prefer instant income or building long-term wealth? Comment below. To wrap up, there's no magic bullet. QYLD is perfect for monthly cash lovers, but mind the erosion. KNG is your dependable, slow but steady engine. In the next episode, we'll dive deep into one of America's most iconic, reliable dividend-paying companies. Which stock is it? Subscribe and stay tuned for the full reveal, strategy breakdown, and whether it belongs in your dividend portfolio. Like, comment, and share if you found value. This is Dividend Surge, where your passive income future gets a boost every week.